I'm Craig Lee.
I'm Robb McGee.
And this is Real Talk with Robb and Craig on Thursday, the 18th of May, 2023. And Robb, start with your dad joke.
Hey, Craig, where do you put a really sure-footed horse? A stable. Get it? He's stable.
I got it. So, down south in the Baptist church, there's this huge thunderstorm coming on, and all of a sudden, their lightning strikes the sanctuary and blows it up. All of a sudden, the smoke kind of clears out, and everybody's run out and is safe, except there's this one older lady sitting on the front pew, and wouldn't you know it, Satan himself is standing there, and he says, "Do you know who I am?" And she says, "Yeah, I know who you are." He said, "Well, aren't you scared?" And she said, "No, not at all. Why would I be? I've been married to your brother for 30 years." I tried to do the, I don't know if it was was it Groucho Marx that did the eyebrows?
Oh, the eyebrows. Yeah, how he got in my pajamas, yeah. I'll never know. Yeah.
But when your eyebrows go white,
hard to see them.
Yeah. What's going on today? Today, let's talk about the truth in mortgage interest rates. The truth.
Give them the truth.
I want you to. You read all kinds of stuff. You study it.
Here is what's happening. This is going to tell you a little bit about why we are where we are, and hopefully a prediction about what's coming in the future. Everybody knows, unless you've been living under a rock, that rates were very low during the pandemic. We had an artificially low interest rate, historic lows. Since then, they've really climbed. And we have a lot of people ask us, why did they go up so much? Why did they go up so fast? Well, it is almost completely tied to inflation. And the fact of the matter is, and I'm sure nobody from the Federal Reserve is going to watch this, but if they did, they wouldn't like me saying it, but the Federal Reserve misunderstood the inflationary numbers. When the country and the economy was coming out of the pandemic, they called the inflation that we were starting to see, transitory. Meaning, hey, we're going to see a little inflation as we transition from the COVID economy, and it'll go away. They were wrong. It was not just transitional. It was lasting and severe. And they missed it, and because of that, they got behind. Now they're trying to play catch up, and if you watched our shows in the past, you know the Federal Reserve has raised their interest rate 10 times in a row. And that we haven't seen that in 40 years, where we've just had raise after raise after raise after raise after raise after increase after increase. So we now are sitting at a Federal Reserve rate that is as high as it's been since 2009. Is that right, Craig?
I don't know.
I think it's 2009. You can fact check me on that. I'm pulling it out of my brain. I believe it's 2009. Now, the good news is the interest rates that we're seeing right now are not historic highs. They feel high because we just came off of historic lows. But the fact of the matter is, we're sitting right around, very close to the 30-year average of mortgage interest rates. And we're seeing business starting to pick up. More people are willing to list their home. More people are considering buying a home. Why? Well, because now all of a sudden the interest rates that we have don't feel new and damagingly high. People have gotten used to it a little bit. And the fact of the matter is, we've settled into a more normal rate environment. More good news, the Federal Reserve, the measures that they've taken is starting to reduce inflation. We're seeing inflation, the percentage coming down, which is the whole reason they raised rates. They're trying to control that inflation, and it is working. Sadly, if they had correctly called the inflation in the beginning, it would have worked months ago, and we wouldn't still be in this pickle. But they were late with it. But it is working, and I believe, Craig and I sometimes disagree on this, but I believe we're going to see rates start to dribble down as inflation drops.
I had you do that because I don't understand any of it.
He does.
I'm always curious how we count on a government that is in the $1 trillion deficit, that's spending way more money than they're bringing in, and yet, so many government entities waste money, billions and billions of dollars, and so we're counting on them to help us get pulled out of a situation that, obviously rates couldn't stay where they were.
Kind of like asking an arsonist help you put out a fire.
Yeah. Although he probably could.
He knows a thing or two, right? Yeah. But he likes that fire to burn.
Sure.
So
it's hot.
Yeah.
I really don't understand it all. And here's the beauty of it. If you watch, if you go from one news channel to the other, depending on who owns those channels, you're going to get a different flip of the coin.
True.
And
but one thing they're consistent on, they'll usually find a negative approach for it, because
sure.
that's ratings. Yeah.
I just don't get it all. So I'm kind of my moron approach is I watch the gas prices, and gas prices have stuck to $4.29 at this one place that I checked, Fred Meyer's. I think they're doing that because they're eventually going to start ticking gas up a little bit more, and then
I think we'll get to 5,
and then come back like you were saying.
Yeah.
And then when we get to $4.29, we'll be like, oh, that's great.
It's a deal.
You know what? It's a manipulating factor that is horrible, that we are victims of it.
Yeah.
Of course, this is just my opinion. I think the truth is somebody somewhere is getting paid a whole bunch of money to make these bad choices that affect everybody. So the truth is, I personally don't know, and I think that if you've watched anything in the mortgage industry over the last 25 years, you're going to see a lot of people don't know. They're all saying,
even the experts,
I saw this coming. Really, you saw it? No, you didn't.
Yeah.
And they're still saying stuff like that. But if you just go back 6 months, they're wrong, because what they were saying 6 months ago is completely different than what's happening right now. So I don't know.
We've had year after year of stock market growth, growth, and there are people out there who have been predicting a bear market, a declining in the stock market for years.
I know the term bear market.
So eventually, these people predicting the bear market, they'll be right. Eventually, they'll be right. But in the meantime, they have missed out on years of gain because they're always predicting the negative. Eventually, you'll be right. Things move in cycles. They go up and they go down. Eventually, interest rates will drop. We don't know exactly when that will be. We know that will happen because one thing that's constant is they're cyclical. They move up and down.
Well, and when we say they drop, that doesn't mean they're going to drop much lower from where they are right now.
No.
That just means they could go up a little bit and come back down.
Neither one of us expect, and I don't know anybody who thinks that we'll get back to COVID pandemic interest rates. Those were an anomaly, and hopefully a lot of people out there, a lot of people that watch this show took advantage of them. We helped a lot of people take advantage of them. Yeah. It was a great opportunity.
You know what? But again, and I say this all the time, if you are at 3.5% or even lower, and you have tons of credit card debt, I mean, it's easy to go back and research all this stuff. If it's not helping you, if you can better yourself by using some of that equity, because right now, equity is at an all-time high in America.
Yep.
And so why not take advantage of it?
And that's true in the Pacific Northwest as well. Our values.
Because we're in America.
We are. But I mean, I shouldn't have said it's true. It's even more true up here. We've had greater gains than a lot of the country.
Okay.
Yeah. So, and Craig's right. Sometimes it doesn't matter what your interest is. It may be better to use the equity you have. And if you've been in your home for more than a year, you have equity. That's the way this market has gone. Sometimes it's better to use that, even if it means you'll be at a higher interest rate. And if you want to know, if you'd like us to do a breakdown for you, call us. We will tell you our true opinion. Here's what you could save a month. Yes, the interest rate's higher, might be worth it to save $500 a month, because who cares?
The interest rate would be higher on your mortgage.
Mortgage only.
But when you compress all of them, it's going to be lower. You're lowering your interest rate overall.
We call that a blended rate. So what Craig's talking about is if you have 5 credit cards and 2 car loans, and they range anywhere from 12 to 29%. Excuse me.
Average car payment in America right now?
$800.
$800. So listen, you don't have to have 5 credit cards. You could have 1 or 2 credit cards. And if you're going to pay on that minimum payment, because everybody says, I'm going to pay it off every month, I'm going to pay it off. But that's been 3 or 4 years go by or longer.
Right.
You got to make that money work for you. And if it's your money is tied up in your home, in the equity in your home, use that money to better yourself. Yeah. Then find a way to get the structure and the discipline to not go back into the spending habits that got you in trouble. If you're in trouble, it's not for everybody. Some people are doing great. With that said, I still don't know how interest rates or what they're going to be in next week, tomorrow.
Nobody does for sure. All we can do is take an educated guess. We try to educate ourselves. We try to be aware and give you our opinions, but anything can happen. Right now, we've got the debt ceiling issue. That's pushing rates higher because the bond market is concerned about it. When they solve that, it could be a benefit to us, but who knows? All these things are very fluid.
That's awesome.
Hey, I want to say next week we're going to our favorite place to do the show.
A buffet?
Yeah, we should do one from one.
No, we shouldn't. Hey, true story. About 25 years ago, we almost got kicked out of a buffet because, we were enjoying the buffet.
A lot of them have time limits now.
No, do they really?
Yeah. If you're there, that's where I've never been to one that has that, but I've heard you get like an hour. And then at the hour, they kick you out.
Yeah.
I don't know. But okay, next week, for real, we're going to be at Destination Harley-Davidson. We'll be talking with Tara Wilcox. We'll be discussing our upcoming event. It's closer every show. June 24th, Destination to Gold. We're going to be having it right here at our office. Everybody knows by now, live band. Over 50 vendors to take a look at. They're going to be handing out free stuff and information and a lot of fun. Some great food trucks where you can buy yourself lunch. But if you come, you're going to have a great time. We guarantee it. And if you don't, you get your money back.
And you say to us, hey, I watch Real Talk, and you said if I come up and say abracadabra, that's the key word.
Abracadabra.
We will buy you lunch from one of those food trucks.
I thought it was ice cream. I thought we were buying them ice cream.
Yeah.
All right.
You know what? We're gonna step up and go a little crazy.
All right.
We want people. There's 50 plus vendors already, with more waiting to come on. We'll turn off the vendors. We've got about 7 more, give or take.
Then we're gonna be full.
It's also it fills up the shirt or the flyers and everything, and that we stop about 3 weeks out of the event. And that way we can get the T-shirts made up and all the stuff that we do. Ignite is playing this Saturday. It's the band that's going to be here. They're playing.
Really good band. Joe Higby, hello, Joe.
Joe, shout out to Joe. Hey.
Holla.
Also, this Saturday, if you want to see me on a motorcycle, you can go to the Bremerton parade. It's for the veterans, the Veterans Day Parade. I don't know why that was so hard for me to say. It starts at...
it all makes sense now.
Yeah.
And if you want to see me, I'm going to be at an open house with Brenda Kelly, who's going to be here at Destination Gold, handing out free cotton candy. But we're doing an open house in Stillicum this weekend. Go on to Brenda Kelly's website, and the address and everything is posted there. It's a beautiful home. View of the sound, gorgeous home in Stillicum. I'll be there Saturday and Sunday.
Just to keep him in your prayers, because I just got a call. My dad's been in the hospital for a couple days. He's got, in the Lee family, we got heart issues. And my pop he's had 3 open heart surgeries, 3 heart attacks. He's had a little bit more damage than I've had by far, and he's still kicking. He just bought a bunch of weights. He's lifting weights again.
Lifting weights.
He's just starting to feel good, and so keep him in your prayers. They think he might have congestive heart failure. In addition to that, and my mother-in-law has that, so it's we're kind of blessed to get hit with every angle of things. With that said, hey, it's
prayers to you, Bill.
Thank you. It's been a great weekend or week. It's the weather in Washington has been absolutely beautiful, and it's cooled down a little bit, which makes it a little bit nicer.
Yeah, I prefer it in the 80s to 90s, Craig.
Yeah. I agree with that. So lots of great things going on. We'll be in destination next week. I'm Craig Lee.
I'm Robb McGee.
That's Real Talk with Robb and Craig.